Hey everybody, it's Erik Torenberg, co-founder, partner of Village Global, a network-driven venture firm. And this is Venture Stories, a podcast covering topics relating to tech and business with world-leading experts. Hey everybody, welcome back to another episode of Village Global's Venture Stories. I'm here today with the very special returning guest, Joey Krug, co-founder of Augur. So Joey, welcome back to the podcast. For those who missed our previous episodes where we go pretty deep on it, why don't you describe what a prediction market is and why it's so, potentially game-changing?
Yeah, so a prediction market is really just a generic, sort of betting or financial market that allows people to speculate on the outcomes of real world events. And so it's most easy to understand it if you have a concrete example. So an example might be if you're betting on a horse race, which horse is going to win the race? Or it could be something that's like more useful for society, like which company is most likely to create the first FDA-approved coronavirus vaccine. And then maybe you could allocate funding according to the one that the market thinks has the highest chance of success. Those are kind of like two completely opposite ends of the spectrum, but there's a wide range of things you can use these markets for.
And what is the innovation behind Augur?
Yeah, so Augur itself is the first decentralized prediction market platform. So it allows people to create these markets in a few points and clicks where there's no one entity that custodies the funds, there's no one who processes the trades, and everything is peer-to-peer. So you're not going through a centralized company, you're actually doing this all on the Ethereum blockchain.
And why prediction markets have been around for quite some time. What's the why now? What's the real innovation here that can popularize them when it wasn't before?
Yeah, so I think it's really Ethereum in its global nature. It sort of allows there to be these global liquidity pools, which I think is really interesting. And then I think it's also an economic thing. If you're running all this infrastructure like a traditional company would, and having all these employees and everything, it costs a lot of money to operate, which is why sites like Betfair charge the really top traders 40, 50% in fees. It's not because like Betfair is greedy. Of course, they want to make money like any other business, but they have to charge a certain level of fees in order to keep the lights on. And if it's just a peer-to-peer thing, and everyone's computer is sort of contributing a little bit, it sort of shifts the economic model. And you can all of a sudden have these markets where previously prediction markets have been very expensive to use. And so they've never really sort of become like financial markets where they're widely adopted and very low cost and, really easy to trade on. I think Ethereum long run will enable that. We still have a long ways to get there, but I think that's the direction it's going to go.
It's been around a year or so. Why don't you start by giving us an update on prediction markets with Augur in general, but also with just the broader ecosystem? How has prediction markets evolved?
Yes, I think, in terms of prediction markets, kind of starting to be getting the first real big one, I'd say, was Intrade. They allowed basically betting on the 2008 and 2012 US presidential elections. That's where they got a lot of their volume. They eventually shut down, I think, sometime in 2016. And maybe plus or minus 2 years there. And then since then, there hasn't really been a huge player. There's PredictIt, which is kind of a New Zealand and US company, which lets people bet on politics, and that's pretty big. And then there's not a lot, outside of PredictIt. The only other real things that exist at the moment are some of these decentralized prediction markets on top of Ethereum.
And why don't you give us an update on the state of Augur and where it's going?
Yeah, so for Augur, we just launched version 2 like 2 days ago. And so it fixes a lot of the main issues that people had in version 1. It lets you basically trade in this currency called DAI, which is a coin pegged to the US dollar. So you're effectively able to sort of bet in dollars, so you're not having volatility risk of using cryptocurrencies. It also does a lot of things to make it easier for traders and market makers, by basically lowering the cost to place orders. In the first version, to actually place an order to, like, say I might want to bet on something, it actually costs you money. That doesn't cost any money anymore. It only costs money when you actually make a bet. The last thing we did is we basically revamped the entire UI from a design standpoint. So it looks like if you're familiar with trading UIs, it's very easy to follow. For people who are more familiar with betting UIs, they'll probably have to wait until we launch a betting skin.
If I had to guess on what are the biggest bottlenecks, holding this back from real, mainstream adoption of prediction markets, I'd guess regulatory, then technical, then sort of UX, then sort of cultural behavior changes. Would you edit that order before going into each one of them?
Yeah, I mean, I think the biggest one is it all boils down to liquidity, and there's a lot of reasons why liquidity may be low or liquidity may be high. Like for instance, on Augur V2 that just came out, the first couple of days there are a bunch of issues where due to a bunch of things that have changed on Ethereum because it's built on this decentralized blockchain platform called Ethereum, transaction costs got really high, and so for the first 48 hours, we're actually shipping a release today that by the time this airs, it'll already be live, but for the first 48 hours, it costs you like $100 to $150 just to even start before you even placed your first bet. It's like, that's a huge hurdle to liquidity, right? And so that's how I think about it. It's like, what are the different hurdles to liquidity? And you're right, there's like 4 or 5 different things that could potentially be one of those hurdles.
Yeah. And so why don't you talk about the state of Ethereum more broadly, but also as it relates to solving some of these scalability challenges?
Yeah, so more broadly, Ethereum, it came out in 2015, actually 5 years ago today, talking on July 30th. And, it's been really interesting. It lets you basically create these kind of generic sort of smart contracts or these generic financial agreements on sort of whatever you want. The downside, though, has always been, as you mentioned, scalability. It's not very scalable. You can do, 10 to 15 transactions a second. And in the transactions you do right now, because the network is so congested, it's like a traffic jam. But there's like one toll road, and the toll road's really, really narrow, and only one car can fit through it at a time. And so the toll is really expensive, is sort of like the analogy I would use. To get an Ethereum transaction in and do it quickly, you're talking tens of dollars right now, which is prohibitive for a lot of users. There's, I would say, a half dozen different ways that you could seriously solve this problem. And all of those ways are, or like maybe 5 or so of those are like in what I call test nets. They're test networks. They're not with real money yet. They're not live. But I think we'll see a lot of those go live over the next 6 months to a year and sort of finally solve this scalability problem for real.
If you were Vitalik for a day or a year or the next 5 years, what would you do to help solve some of the Ethereum's challenges? Or what would you do differently or more of that Ethereum should be doing?
Yeah, I mean, I don't think there's necessarily anything I particularly do different. I guess the one thing I might do differently is I might try to get the sort of core devs to really engage more with developers who are building decentralized apps on top of Ethereum to make sure that the scalability solutions they're designing are sort of in line with what users want, particularly from like the developer standpoint, and then also how that flows through to the end user. That's something I think there's not a ton of, but like other than that, I think Vitalik has an immense job and he's doing quite well at it. I think it's just there's a lot of problems to solve, and you can only solve 1 or 2 things at a time.
Totally. Let's go back to prediction markets before zooming out again. Talk about some of the regulatory hurdles and where are we in potentially solving for them. Yeah,
so I think if you look at prediction markets historically, they're if you operate one, so if you basically take the bets, you custody customer funds, that sort of thing. It's regulated kind of slightly differently in different countries. Some countries it's regulated as betting, and some countries it's regulated more as a financial product. And the idea behind Augur is to create something it's sort of more like Bitcoin or Ethereum, where there is no person who custodies the funds, there is no person who processes the trades. So you don't have to trust one person to do all those activities. It just happens, purely algorithmically using the Ethereum network. And so if you look at that, you can start to open up liquidity barriers. And so the way I think about it is, if you imagine Bitcoin allows you to send money from one person to another. And then when that person withdraws back to cash, or when they deposit cash into Bitcoin, then at that point, they get KYC, they get AML checked, they get verified to make sure everything is perfectly fine. That's sort of how I think like long term is what makes the most sense for these decentralized apps, including prediction markets. How you look at them from a regulatory standpoint, it's you regulate the fiat on ramps and off ramps.
What is there a country where it's everyone is doing their prediction markets out of, like, what's the best jurisdiction for this?
I think the most popular jurisdiction for prediction markets is the United Kingdom. Prediction markets is kind of an academic term. I don't know who really came up with it, but basically, it's a generic term for any sort of financial market that allows you to basically bet on some real world event, whether that's a sporting event or just straight up betting, or whether that's, whether like something's going to happen to a certain company, or like whether like SpaceX is going to launch the next rocket successfully, or if they'll abort the mission instead, things like that, really anything. And so the UK has kind of really, like, that's the country with the biggest betting culture. There's sites like Betfair, Bet365. Betfair is actually an exchange. So it's like actually a prediction market. You're trading with other real people around the world. There's some problems with Betfair though. Like, they charge you, if you're a really popular market maker there, they charge you 40, 50, sometimes in some cases 60% of your profits as fees just go straight to them. And so that's sort of like another part of the idea behind Augur is it should operate at its sort of bare economic minimum cost. So today it's not cheap because Ethereum is expensive, but long term, Augur should be the cheapest place to do any sort of betting or trading.
Is prediction markets just a fancy word for gambling? Like, people have been betting on sports for quite some time. Is that a prediction market? Or are you taking what they do on sports and just applying that everywhere else?
Yes, I mean, it gets into semantics a bit. I always think of betting and gambling as two distinct things. So I think of gambling, that's like, rolling a dice roll or going to the convenience store and buying a lottery ticket. And then betting, I think, I always associate that with having some sort of skill attached to it. And so I think, like, it is betting for sure. It's like, are you betting on a horse race, whether you're betting on something financial, no matter what it is, you're taking a bet. And I think that's like one reason why people like prediction markets a lot, is it kind of forces you to think in bets. You can really take this very far. Like, everything in life is a bet. Like if you're driving to the city and spending an hour in traffic, like, you're basically taking a bet that the expected value of whatever value you're getting out of the city is higher than like the risk that you get in a car accident. There's like every decision in life is a bet. And that's kind of how I think about it.
And I feel like sports betting has been around for some time. Has it sort of been carved out, had a special carve out legally where that was allowed, but maybe other types of betting sites weren't? Or what are the thoughts there?
Yeah, so sports betting, so all betting has been around a long time, both sports and politics. And then there's other like things that are outside of those two that people like to bet on sometimes as well, that are kind of more one-off things. It really just depends on the country. There's like 180 something different countries, and every country views this slightly differently. And like, you can dive in and read about it, and it's really quite different across all countries. The one couple of things that are true are that, most countries have some sort of sports betting that exists there. And then some countries have political betting, and then some countries just have no like legislation about it at all. There's not much surrounding prediction markets in China, for instance.
And so what else are people betting on? Like, in the last year, if you look at sort of if you had to make a pie chart of what you think people are, betting on or making predictions on, you mentioned politics, but what else is in there? How would you pie chart it?
Yeah, I think you have like, politics, sports, like prices of cryptocurrencies, because people are using this on Ethereum. And then you have kind of a long tail of really just random things, like current events. I'm drawing a blank on a good example at the moment, but like whatever a popular current event is at a given time, there's probably some market on that people are betting on.
Cases of COVID or something, COVID deaths. Or something.
Yeah, or like vaccine approvals, whatever the current kind of top news of the month is, there's probably a market on that somewhere.
Yeah. And sort of the dream here is that you sort of benefit from the wisdom of crowds, in that when I look at, who's likely to win tonight, the Lakers or the Clippers, I look at the odds basically based on a ton of people making bets, and that should give me some signal as to what is likely to happen. Sort of like polling, right? Is that effectively how you see sort of the wisdom of crowds being manifested here?
Yeah, exactly. I think, long term, it's like you could envision the line we always use, like early on when talking about Augur, was like, you have a weather app on your phone. Why don't you have an app that tells you the future without anything else? Because weather's probabilistic too. And so that's kind of like the long-term idea.
Totally. And it's one example I'm curious about is like betting on someone's Twitter followers. Like, I think this person's Twitter followers is going to significantly increase, or someone's, Instagram followers or YouTube followers. It's sort of a tangible, a quantifiable way to bet on a person. But I wonder if there could be, instead of just, this person will get to 10,000 followers, yes, no, if it could be weighted for how early I am to that bet. Similarly, like if I make an early bet on a cryptocurrency, I get a corresponding sort of reward for that. Could something similar exist for predictions? Like I'm early.
Yeah.
What do you think about that?
Yeah, definitely. So these exist. Augur calls them scalar markets, but basically it's the idea you have a range of values. And so in the Twitter market one, say the person when the market starts, they have 5,000 followers. Maybe you make a market with a range from 4,000, just to lose some, all
Yeah.
the way to like 10,000. If they go above 10,000, the payout's constrained. You still only get the payout as if they had 10,000 because you can't have basically everything in these prediction markets is fully collateralized. There's no
Yeah.
like margin or whatever. But yeah, you can have a market like that.
Yeah. Have you looked into idea markets at all?
I've like been to the site and read a bit about it once, but I actually don't remember like anything about it. I'm kind of drawing a blank.
Yeah, so the holy grail here is to basically go to like a stock market for ideas and go to a website that's like capitalism's up 20% today, communism's down, this meme is really popular, this idea is less popular, people are buying or selling. Kanye just had a breakdown, he's down 40%. And so in some of you can envision like, oh, I discovered this person, or I discovered this artist, or I discovered this concept or this meme. I want to
Hmm.
bet that it's going to become pretty big and maybe try to, make it really big. I'm going to go early. And just like I'm getting into new cryptocurrency, I'm going to have disproportionate reward in advance for that. And it itself will be a time-stamped sort of, identifier of discovery of, hey, I was the first person to discover this artist on this website,
Hmm.
first person to discover this meme. I'm one of the first people to, highlight the Knicks. I'm a fan of the Knicks. That's like almost like, I feel like Crypto Kitties had a little bit of this in terms of status around, around kitties, but this would be for everything else. What do you think about this idea? I've had it for a while. I'm curious if it could work.
Yeah, I think that would work. I think like anything else with prediction markets, it kind of boils down to liquidity. There's actually somebody who tried this idea on Augur V1. I think it was just too early, but there was some activity on it. What they did is they made it for not for like newer people, but for more like already famous celebrities. So you'd have like there's like an Ariana Grande index, and there was like maybe a Taylor Swift one, and I forget who else. And you could buy it, and it was buying a basket of things like betting that Taylor Swift's new album sales would be a certain level, or betting that she'd sell out a certain number of concert seats at her next tour, and stuff like that. So I think long term, yeah. And once there's like enough liquidity, you can do stuff like that
Totally.
for sure.
Well, let's use that same example because this is slightly different. Where let's say Taylor Swift, but it's not that she will sell X amount. It's really just that more people will want to own these like collectibles, basically. And so Taylor Swift, it's like maybe you auction it off. I don't know how, but you get a timestamp, sort of like you were the third person, you were the 13th person, you were the 30th. Like imagine if you were the 30th person to buy Bitcoin. One, you'd be very rich, but two, for some people, you might want that might be a certain status symbol
Right.
that is meaningful. And so the only way the price goes up is if more people buy it, or just
Right.
support demand, or buy versus sell. Like, what do you think about that? Like, not tied to actually a prediction, just tied to like whimsical speculation, basically.
Yeah, that's really interesting. I haven't really thought much about that. I don't even know how the market dynamics play out with that, but that's actually really interesting.
Yeah, and how much liquidity do you need for for something like this to be meaningful?
There's like two aspects to that. There's like how much do you need for it to be real predictions that have value in the world, and the answer that's actually pretty low. There's a lot of academic literature on this, and markets converge pretty accurately, even with relatively low levels of liquidity. A couple of days ago when I was looking at Augur V2, which like was pretty hard to use back then, there were some markets where like there's $4,000 or $5,000 on each side for the best bid and ask, and the spread was a tenth of a penny. And so even with small amounts of liquidity kind of in the center of the order book, you can actually get pretty accurate pricing. And then what researchers have done is they've compared this. They've taken markets that have had small liquidity in the past and compared them to what actually happened, right? And so like a market that says something has a 40% chance of happening, on average, if you have 100 markets like that, on average, the event should happen 40% of the time. And so it turns out with like, $5,000 to $10,000 of liquidity or so, you can get a market's pretty accurate. Of course, it gets more accurate as you add more, but like the difference between 0 and 5,000 is a 0 to 1 difference. 5,000 to 50,000 is like an incremental addition.
Yeah, totally. And how have you interfaced with the academic literature on prediction markets, or how has the academic literature and prediction markets continued to evolve as we've made these, innovations in the last few years?
So basically, when I first got involved, I read like every paper that I could find. There's not that many. There's like probably at most, 50 or 60. And the really, like, the literature talks about two things, basically. It talks about the concept of how these markets, provide real predictions that are actually valuable, and they're more accurate than almost any other source of getting predictions about the future. And then the second thing that they talk about is mechanisms for having like liquidity mechanisms in these markets. Like, what if you had a way to provide liquidity instead of using an order book? And so that was actually the first sort of automated market literature. Like, I'm sure a lot of listeners here have heard of Uniswap on Ethereum. It's a decentralized exchange that uses this automated market maker. So you're not trading against individual users directly, you're trading against this pool of liquidity. That literature and that concept originated in the prediction market literature.
Have you talked much to Robin Hanson? And if so, where do you have any differences of opinion?
Yeah, so he's always been an advisor to Augur probably since maybe a month or two in. I haven't talked to him too recently, but I think a lot of what he says about prediction markets is accurate. I think, one thing that he might differ a bit on is, he's super into the academic use cases of like, hey, we're going to get this real world information and make a prediction. And then like, we can use that for something useful. I am too, but I think to get there, you need to get liquidity around stuff that people find interesting outside of that. So like, maybe it's not the most interesting thing in the world to bet on the outcome of an English soccer match, and it's probably not the most academically valuable thing either. But my view is if you can get liquidity around this other stuff, it will kind of trickle through or trickle down to other markets where, like, if you have a bunch of people who are betting on stuff that they enjoy, and then they see a market on like, will this company's vaccine get approved or not, then there's a decent chance that they might bet on that as well. But if you just launch a site where it's just like, will they bet on this, will this vaccine exist, or will SpaceX's rocket launch or whatever, I don't think you're going to get a lot of liquidity. And that's like one area where, Hanson and I might differ on that. I don't know. And that's like 3 years out of date. So maybe he has a different view now.
So trickle down, you're the Ronald Reagan of prediction markets.
Yeah, we'll see if that works or not, but that's my bet.
Yeah. His hope is that instead of like, for example, a company board determining whether a CEO should be fired, you poll the employees and they bet on sort of what the revenue would look like with a different CEO or not, or will this product launch or this movie, how will it do? And he has this broader dream of what he calls futarchy, right? Which is sort of governance run by predictions. Mm-hmm. Have you run by betting? Have you seen anything even remotely close to any organization trying that or any experiments?
Yeah, I'm aware of some organizations that have tried it in the past. Like I've heard stories, of people like, oh, at Google, we have prediction markets internally for a period of time or whatever. I'm not sure what really ended up happening to those. Usually I think the problem with running a prediction market within a company or organization is that Hanson, himself has said that this is a problem. The problem is a political problem. So you run it and the market tells people something they don't want to hear. And then, what do you do about it? And it's usually management doesn't want to hear what the market's telling them. And so that's like, it's a tough problem to do that kind of stuff with organizations. There have been some prediction markets for like product launches that I think have worked though. Like when Ethereum was coming out in 2015, there was a centralized prediction market called like Fairlay that listed markets for like, will Ethereum launch by July, August, September, October of 2015? And I actually made some money on that one, betting that it would launch in July because no one thought that it would. And so yeah, it does work, but sometimes you have to go outside the organization to get people to do it.
Yeah, it's interesting, this idea. People talk about skin in the game. It seems Lev is writing about skin in the game, and right now, people making all sorts of predictions, all sorts of ideas. Sometimes it's hard to know if they really believe them. And prediction markets, can easily enable, hey, are you willing to bet on this? As a way of, so prediction markets is sort of like skin in the game as a service or something.
Yeah, exactly. One thing I found too is, when you ask people to bet on something, you often find out that they don't actually disagree with you. They are thinking something slightly different, but when you specify the terms of the bet, they actually agree. That happens like 80% of the time in my experience, because I challenge people to, like if somebody says something I just blatantly disagree with it, I'll be like, I don't think that's right. Like how much would you bet that's the case? And usually you define the terms and then they're like, actually, I agree with you.
Yeah. And so why is it? Because they're misspeaking, or because they want something else to be true, or they're trying to get across a different point, or why does that happen?
I think what happens is, people view things differently. So like, for instance, a good example of this would be like, if you're thinking about something quantitative, right? Someone might be like, oh, I think a lot of X thing is going to happen. And somebody else is like, no, no way. Like,
Yeah.
there's not a lot of that. That's not going to happen. Say it's like rainfall. I think like somebody's like, oh, I think a ton of rain is going to occur. And then like the other person's like, no way, no way. And then the first person says, okay, well, I think, it's going to be at least 100 inches of rain. And another person says, oh, well, I actually agree with that. I was thinking a lot and 1,000 inches. It's stuff like that where once you quantify it, there's always disagreements still sometimes, but like not to the degree that you might think before you quantify something.
Yeah. Betting's, because it's been outlawed for so long, sort of has a somewhat of a stigma attached to it, or at least people don't think about, betting in the context of like social good. Like, here's how we make better decisions, get better data. And there's some education that needs to happen around that.
Yeah. So I think if you think about betting, from like a social good standpoint, I think betting has brought a ton of good into the world. And so it helps to start with some history. So if you think about, the history of markets in general, they've always been viewed as betting and pure speculation and not useful when they first come out. And so this happened when the first stock exchanges came out. Within a decade, people were like, this is just useless speculation. There's no value in this. There's no value in trading on these companies. It's just all like fake. It doesn't matter. And then eventually trading on stocks became to be accepted. Almost most people in the US, or a lot of people in the US, have a 401k. They're taking bets on stocks. They may not be thinking about it actively, but they are. And then after stocks came out, then you had like bonds. I'm probably messing up the ordering. Maybe bonds came first, but either way, those were viewed as being betting and crazy. And then you have derivatives. So you have like futures, options, swaps, that sort of stuff. When derivatives first came out, they were viewed as being, really wacky and like, that's just pure betting. There's actually, if anybody's interested in learning more about this, Chris Giancarlo, who used to run the US CFTC. So the Pope basically said, the Catholic Church Pope, he basically said, I don't think derivatives are good. I think they're bad. They like don't add value into the world. And so Chris Giancarlo, he's a Catholic, I think, and he wrote like a really long essay being like, this is why derivatives are good. They actually add a lot of value to the world. And he ended up, I think he ended up like meeting with the Pope and discussing it, whatever. But the point is, derivatives do add a lot of value. A concrete example of this is things like insurance, crop insurance, homeowners insurance, car insurance, health insurance. All these things are basically bets. People don't think about them because once some new thing is added to society and then society accepts it, within 100 years, it's no longer viewed as a bet. But when it's first added, it's always viewed as this crazy thing to bet on. And so the long story short, I think betting is going to be the same thing. Betting is just more, the sort of betting that people do today is more recent. I think over time it'll get more financialized and people will view it with the same respect they view other assets.
Yeah. Derivatives have a stigma attached to them because of 2008, right?
Yeah. Well, they had a stigma when they were first introduced to well before 2008. Yeah. So it's like, there's always some, like whatever the cutting edge of markets technology, it's viewed as betting until like it's no longer the cutting edge.
Totally. And to the extent that anything has trade-offs or potential side effects, what are some potential side effects of prediction markets? So obviously the positive ones are we get, better data, from, for everything basically, and thus can make better financial decisions, better life decisions, and have better sort of clarity over what's actually happening and better sense making. The negative one, people point to assassination markets at times. What are other negative side effects, and how do we potentially address them?
Well, yeah, I think the biggest negative side effect of any market that's sort of like a synthetic market is that it's some people are going to lose money when they're betting, right? It's like if you're trading a derivative in the equities world, in many cases it's zero sum. So somebody wins, somebody loses. And so the same thing is true in betting. So that's probably like the biggest side effect is some people are not going to be good bettors and they're going to lose money. But that's sort of true with a lot of things in life. It's not just true with betting. Outside of that, the only other real critique of prediction markets is this idea that like prediction markets can influence real world events, because if you bet a lot on some event, you bet a lot against an event, you can encourage that event to happen. I think in practice, that's not really a real problem. These incentives exist in financial markets as well. You can you could sabotage a company. Like you could light Tesla's factory on fire and buy a ton of put options that expire 24 hours from now that are out of the money. And that sort of activity doesn't really happen. I'm sure some crazy corporate sabotage stuff has happened in the past and people have made money off it, but it's not the common thing. It's very, very rare, and the amount of money you need for that to actually happen is really, really large sums of money.
So let's say you're back here, next year around the same time. What is your hope for where prediction markets is, and what do you think is sort of the next meaningful milestone?
Yeah, so I think so the way I describe it is when we released Augur V1, it was really tough to use. You had to do your bets in this cryptocurrency that was super volatile. There were the laundry list. It would take too long to list out all the issues. With Augur V2, I think, especially with this update we're going to push today, after that, really the only big issue is that Ethereum is still kind of slow. It may take 30 seconds to a minute for your transaction to go through. And it's pretty expensive. It costs like $10 to $20 to do a trade. It's kind of like the old online brokerage days. When your broker, you call them up on the phone and they charge you $20, except Ethereum is charging you that to do a trade on Augur right now. And so if I come back in a year, the thing I'd like to be different is I'd like to be able to tell you Augur V3 launched. It's really fast. Like your trades happen in 1 or 2 seconds. And it only costs you 2 or 3 cents, or maybe 1 or 2 cents to do a trade. And at that point, it should be like so easy to use that you have all the benefits of these decentralized prediction markets. It's so good that it feels centralized. And a couple of people have thought that with Augur V2. Like somebody tweeted out being like, this thing is centralized. It sucks. I thought Augur was a decentralized project. And I talked to him, and the reason why they thought it was centralized is it just loaded so fast. They were confused and thought we had just like centralized everything. But in reality, it's completely peer-to-peer, and it's entirely in your browser. It's super decentralized. But I think you still can't get around the cost and speed issues right now. And that's what I want to have fixed a year from now.
Yeah. Has there been any behavior in terms of actual bets or predictions that have surprised you, or that you might expect to see that we haven't yet seen yet in terms of the actual bets themselves?
I don't think so. I think maybe one thing that surprised me is how tight the spreads are on V2. I wasn't expecting to see like a couple tenths of a penny or 1/10 of a penny in some cases be the spreads between these markets. So that's surprising to me. But I don't really know anything beyond that. I thought the Ethereum cost would sort of make people not be that precise with their spreads, but they're still doing it anyway, which is interesting.
Let's zoom out to talk about the state of crypto more broadly. So describe a little bit the past year in the broad ecosystem, and perhaps put it in context of what we've seen since sort of the great bull run of 2017.
So I would say really quick, after 2017, the space sort of entered a pretty dark winter. 2018, prices went down a ton, like 80% or so across the board. 2019 was kind of gradual sort of recovery from that. But still kind of things went down a good amount, I think, in the fall 2019 for a lot of assets outside of Bitcoin. And what happened during those 2 years is a lot of people were just continuing to build what they were working on. People didn't stop building things because the price went down. In fact, it's more easy to focus when the prices are low because nobody's talking about it. And so you can just kind of continue iterating on something and keep working on it. And so, in the past year, we've seen a bunch of different things go live. In the past 2 years, we've seen Compound go live. MakerDAO went live. These are both lending protocols. One of them has a stablecoin associated with it. Uniswap's volumes have grown by a huge amount. So people are finally starting to use these decentralized finance apps. They tend to center around things that you can kind of do one transaction and get a lot done in that one transaction. So they tend to be like lending, borrowing, using these automated liquidity pools, not an order book, because order books require speed. But these big automated market makers don't. And more recently, over the past 6 months, we've seen, I think, an acceleration in this decentralized finance space where people are starting to launch new tokens again. They tend to have like some sort of governance functionality and, eventually some claim on cash flows in the network. And I guess the only other thing is there's this term yield farming that people are talking about, where they're basically locking up cryptocurrency. It's usually stable coins or currencies pegged to the dollar, and then earning some additional token or earning interest somehow, whether it's like via trading fees, lending to someone, or the interest is just someone's distributing a new token and they're giving it to you in exchange for the capital that you're locking up.
Yeah. So same question on next year, a year from now, what do you expect to have changed or evolved or in the crypto ecosystem more broadly? Like what are the biggest things you expect to happen?
Yeah, so I think in the next year, what I expect to see is if you look at what's working now, it tends to be these things that require one-off transactions, not very much scale or low latency. I think in a year from now, we'll see people launch these things that are that do enable low latency, that do enable low cost. I think we'll see what works can change. So you have stuff like 0x, where they're like a top five decentralized exchange, but they're not number one or number two. I think I could easily see them flipping that and becoming the top one, number one or number two, once these scalability constraints are fixed. You'll see stuff like Augur finally become really useful because the latency and speed issues are no longer a problem. And then there's probably, 5 or 6 other use cases that none of us have thought of that people will just start to build once they realize this is possible. And, I'm excited to see those too, because I don't know what they are, but I know it's going to be interesting.
Multicoin wrote a blog post a couple of years ago about the emerging sort of smart contract platform wars, and that they would sort of rival the smartphone wars, sort of almost a couple decades ago. What has happened there? Is Ethereum just sort of clearly dominated? Is it actually a war, or what's happened there?
Yeah, so I think in terms of this, smart contract platforms, the decision you need to make as a developer is where can you build the app that you want to build? It's like any other developer platform. It's that simple. The difference though is that unlike iOS and Android, it's not like you can launch an iOS app and then no one else can access it on Android. That's not what it is. It's more like you can launch something using this SDK, and then anyone on any platform can still play it. You just need the internet to access Augur, regardless of whether Augur was on Ethereum or Near or Polkadot or whatever. So it's more like, I think it's more like the game engine wars. It's like Unity versus Unreal Engine or something. They both allow you to launch games cross-platform. And so I think what that means is it'll probably be less, it's a less important thing than the smartphone wars, in my opinion. Because in the smartphone wars, if you don't win, you're just completely dead. I guess other than that, I think what determines whether people will pick one or another is how easy is it to write apps on it, and how fast is it, and does it allow me to access other things in the ecosystem? Does it allow me to use DAI? Does it allow me to use Uniswap? Things like that. And if the answer is no to any one of those things, it's going to be hard for it to get adoption.
What is the state of stablecoins, and what have we sort of seen there or not seen there?
Yeah, so the current state of stablecoins is you have basically 2 big flavors. You have centralized ones like USDC and Tether, which are basically dollars in a bank account somewhere. And then you have things like DAI, which are collateral backed. So you put a bunch of Ether in a contract, you over collateralize it, and then you issue this stable currency on top of it. It's basically kind of like a debt market almost, or collateralized lending. And those are the 2 big flavors. They have different trade-offs. The centralized ones they can blacklist you. DAI can't really do that. So that's kind of like the landscape.
How do you identify your investment thesis, in July, August 2020, or your sort of request for projects or startups in the space right now?
I do have a thesis on the space, but I think if you just Google like a crypto thesis, it's the first result. And I think I wrote that like a year ago or a year and a half ago. The only thing that's really changed is like progress in the space. I talk about like scalability and fiat on-ramps and stuff, and a lot of that stuff has evolved and improved. But the core of the thesis, like what I'm excited about is still the same. And to me, that's decentralized finance. That's sort of when I came across Ethereum in 2014, that's what got me really excited. I think of it as sort of like the biggest innovation since the internet. And my thesis on it really at a high level is every time society gets more freedom of speech, society advances, in my view. And the same thing applies in my mind to freedom of money. You think of money as a form of speech, which like you can sort of think of it like that due to the Citizens United court case that everybody hates. But if you think of it like that, then Ethereum is just advancing free speech, and so is DeFi. And so we want to invest in any sort of DeFi project or anything that assists that vision. So all the way from, exchanges that facilitate just trading of cryptocurrency, all the way to actual DeFi projects and applications themselves, layer 1 blockchains, and then people, doing like developer tools and things like that. So it's a pretty wide thesis. But I think this is going to be the next big thing after the internet. And so that's what we're excited to fund.
Within DeFi, what are things that you want to exist that have not yet, come to pass yet, or as you've seen even people try it at a meaningful way?
Yeah, I think one thing that would be interesting is somebody took something like 0x and built a way to do the trade settlement on some sort of plasma sidechain. And so basically, in simpler terms, like built a fork of 0x that was like faster, but you could still interact with the main version of 0x on Ethereum. So like it still used the same 0x token, but you just had like this other UI that existed that was like really fast to trade. I think 0x volumes would just skyrocket if that happened. It's technically possible today. It's a huge amount of work, but yeah, I mean that would be something that I think would be very interesting.
How do you think crypto will disrupt venture capital, if at all?
Yeah, I don't think it's going to disrupt it a ton. The one thing crypto does is it democratizes access to financial markets. So it does mean that if you want to raise money from a crowd of people, it's much easier to do that. We've seen that historically, and it's still true to some degree today. I think the thing that it doesn't replace, though, is like, there's two reasons why you might go to a venture capitalist. One is because you need money. The other is because you need like some help or advice or like just some value that the VC provides. So that's why people might choose one VC over another when if you have a popular company, there's going to be 10 VCs who want to invest in you. And so I think crypto will sort of replace the first reason. Like no one's going to go to a VC because they need money anymore. It's already starting to happen anyways, because there's so much capital in the markets now that like if you're doing a company and the company's interesting and has some legs there, you're going to be able to get multiple offers for the most part if you have a strong team. And so I think it's going to disrupt the VCs who all they add is money. For other people, I think they'll always still exist.
Yeah. Jesse Walden just started a new fund, and his sort of thesis is the ownership economy. And one of the things we were talking about is how one of the most exciting things here is just really to provide equity to so many more people, just creating networks that allow users to have equity or upside, not just employees. But I almost wonder if government ever experimented with some form of UBI, if they could do it in the form that would give people upside in companies. And I think this is basically how capitalism gets more popular, is you just give more people a direct share in the upside, as opposed to like getting it on the back end via taxes and then programs, and you don't even like appreciate that Amazon, paid for that. What do you think about that concept, and and where we are at with that?
Yeah, I think that's really interesting. I like that idea. I'm a very capitalist person. I think it's sort of like I forget. I think it's like maybe a Winston Churchill quote, where he says that Americans can do the right thing after they've exhausted all of their options. And capitalism is kind of the same thing. Like, yeah, there's a ton of other systems, but none of them really work. And so I think there's definitely improvements that could be made. There's definitely things that could change for sure. But I think if you look at sort of what's the best way to get something done, it's to let a market do it. The simplest, like most concise example of this is when I think when the Challenger shuttle blew up, there's a company that manufactured the O-rings, but there were like 6 or 7 different companies that are publicly traded that manufacture O-rings, and all of them went down in the first hour. And then a few hours after that, all of them went up except for one. And it took Congress 6 months to make a report and figure out which manufacturer made the faulty O-rings, but the stock market did it in a few hours. Like that's the power of free markets. It's kind of hard to deny. And I think, if more people were educated of that reality in school, a lot of public schooling kind of tells you that like, oh, things are so terrible. And like, every company's just out to get you. And it's like, it's not true.
Yeah. If only Hayek or Milton Friedman were alive to see the sort of price discovery and, markets and everything that we have today.
Yeah. I think they'd like it. They'd probably be disappointed about the Fed printing a ton of money and stuff, but I'm sure they'd like the markets.
Totally. And also there's an interesting shift that we're sort of starting to see a little bit from like debt to equity. And I sort of think that debt in many ways is sort of adversarial or sort of, abstracted, whereas equity is more collaborative and more aligned. And to the extent that we have, common problems that we all face that sometimes aren't even priced in, aligning incentives, presents a lot of options. and whether it's from going to college or maybe even going to the doctor, or just the potential for income share agreements. Is that something that you've looked into much? On the crypto side, personal tokens is something that some people have experimented with. What does this make you think?
Yeah, I think income sharing agreements are really exciting. I remember a few years ago, and somebody syndicated land to school on AngelList, and I put a little bit of money into it. I thought it was a really interesting idea. It's a great way to like give people a big leg up in a free market sort of manner. That like, yeah, I mean, you just read some of the stories. It's crazy. You have people who are like making like $20,000 a year, working like at Walmart or something, and then they kind of got this leg out from land to school, which is a capitalist business. It's not a charity, but then they turn around and they're making $140,000 as an engineer. I just think that's amazing. That's awesome. Like that's like the way things, should work. And, I think you can do that idea for other areas too. Like there's a lot of trades and things that exist that people just aren't aware of. Like there's a lot of trades where people aren't aware that, if you just went to trade school for a year, you can do this thing and literally 3x whatever you're making. I think it's an awesome idea that I'm surprised has taken this long to like happen. Like, it's one of those ideas where it's obvious in hindsight, but nobody really bothered too much prior.
And I think NFTs or other sort of crypto innovations allow you to just have more of those types of exchanges where you can redeem sort of collectibles or experiences with artists hypothetically, or just make speculating on me as a person possible and easy and
right.
able to scale. Do you foresee that being a common behavior in the next, I don't know, decade or so, of sort of people going public effectively, like ICOing themselves?
I don't think that will happen too much. I think I mean, maybe in like an abstract way, like they're using Lambda School or some other company to do it, but not like just selling it directly to people on a blockchain. Because I think the problem with that second category is it has a lot of risk, like similar to like peer-to-peer lending. It's equity instead of like lending them or whatever. But I mean, I just remember I lent a bunch of money back out on BTC Jam back in like 2013 or so, and like lost the most of it. And so I'm kind of scarred from that. And so I'm like, okay, well, if I like give this person money on the internet, there's no guarantee that they'll pay it back. Like on BTC Jam, I had arbitration awards that said, I won the money, but like I like they just owed it to me or whatever, but it's not enforceable. And so those are all problems that like need to be solved somehow, I think.
So there is a group of people who are really excited about crypto because of basically the sovereign individual thesis that it will sort of decouple our dependency on, or help decouple our dependency on governments. And what is your stance on or connection to that group of people, and where are you on charter cities more broadly?
So I've read a good amount about that. I have to confess I haven't actually read the book Sovereign Individual. I know Balaji talks about it a lot. It's on my reading list, but it's been there for like 3 years. I've just never gotten to it yet. I do think charter cities are a very interesting idea. It's this idea that lets you experiment and try a lot of things that you couldn't really otherwise do. I think there should be more of it. I think it's a really, really good idea, and I think it'd be cool to see more.
Totally. Talk a little bit about the state of crypto funds. So we had, in 2017, of course, with the bull run, everyone was raising a fund, and all these different types of funds got off the ground. There were hedge funds, there were traditional venture funds, there were hybrid structures. How is that sort of all? There was questions as to whether the winners would be native or, like your Pantera, like yourselves, Polychain, et cetera, or whether they would be sort of existing players like A16Z and USV or others. Where is sort of the dust settled in how crypto funds operate and how the landscape looks?
Yeah, I mean, I think the way it's settled, I'll get the U.S. side answered because there's a lot of funds overseas in Asia as well that are important and big players in the space too. But I think in the U.S., the way it's settled is you basically have like 4 or 5 pretty serious players. You have Pantera, as you mentioned, you have Polychain, you have Paradigm, you have Andreessen, you have Blockchain Capital, and then there's probably like 1 or 2 other big ones I'm drawing a blank on, and then there's a far long tail after that. And I think that makes sense. Most things in markets follow power laws. If you notice a common theme in there, most of those are crypto native, with the exception of Andreessen Horowitz. So I think it's pretty safe to say the way the dust is settled is it's mostly crypto native. with the exception of Andreessen, who got into the space. And of mainstream VCs, they've been in crypto a very long time relative to other firms. So you could probably almost kind of call them crypto native in a sense, even though they do other stuff besides crypto. And then if you look at other VC firms in the Valley, they're just kind of main popular VCs. You'll notice that on some deals, we may be co-investors with a lot of them. The same thing is true for the other firms I listed, which means that it's still, to them, it's still new enough that they haven't gotten so competitive about it or knowledgeable about it that they're trying to just lead a deal and not get any feedback about it. Versus for the crypto native firms that I listed, we're perfectly fine investing in a deal if nobody else thinks it's interesting. We've done that a couple of times. Some of our best investments have been those kind of deals. So I think that's one difference.
And I feel like earlier, sort of in the bull run, there was this broader even before it, there was this broader sentiment that before even DeFi was a thing, that it would not just be about finance, but really just sort of Web3, and we would have decentralized social networks and decentralized marketplaces, and that they would rival, the centralized counterparts of Dropbox and Airbnb and Facebook and Uber and others. Talk about whether you see that possibly playing out, or what is sort of this the new Web3, and where do you think it will be real, and where do you think it won't happen?
I've always been skeptical of the Web3 thesis. It's never been the thesis that got me excited, with the exception of, it's like that's referring to all the social stuff. I'm also just not a person. I use Twitter, and that's basically it. So I'm not the person to talk to about social media anyway. But I think so I've never been excited about that. My thesis on that is the only real reason to use Web3 for social is privacy, or to some degree censorship. People who are facing censorship are kind of already forced to migrate to other platforms, and for some reason other people don't care that much. There's outrage for a day. It's like, oh, Twitter censored Zero Hedge, but nobody's like, or most people aren't like, but I'm going to leave Twitter because they censored it. And so that's the problem. So that's why Web3 isn't really working there. And then on the other area, the one area I am excited about it is like the marketplace piece. I think that's super tough. But, if somebody told me 10 years from now that there was a app that was like Uber, but that was peer-to-peer, where Uber didn't take a 40% cut or whatever the cut is these days, and it was cheaper for both riders and drivers, but the drivers made more money even, I wouldn't be shocked. I also wouldn't be shocked if it doesn't happen, but I wouldn't be shocked if it does. I would be incredibly shocked if there's a decentralized Twitter that replaces Twitter. And, maybe 5 years from now, if nobody's bothered to do the Uber idea, maybe I'll try it. Because I think it's worth somebody trying that idea. It's theoretically possible. It'd be tough to build the network effect. I think you would need to start in cities, specifically just like how Uber did, where you roll it out. You'd have to get on the driver boards, get all the drivers involved. But I don't think it's impossible.
Yeah. And you saw Jack with his Blue Sky is trying to experiment there into sort of decentralizing Twitter over time, such that perhaps he doesn't have to make these tough calls. But
yeah,
might be hard.
I mean, if they do it, maybe it will work. But I think the problem is everybody has their followers on Twitter, and the people they follow are there. So it's it's the classic network effect problem. It's hard to break it. I think Uber's easier to break, and Airbnb. Yeah. You can start in one city.
What about Blockstack, or people are trying sort of in the browser, or what do you think about that?
I think it's interesting. I think it's I think it kind of has a lot of the same problems the rest of the Web3 stuff does, though, where it's just the average person doesn't care.
Yeah. The only thing that would make them care is perhaps, I don't know, either increased regulation on these social media platforms such that they'd have to diversify or something, or open, or not diversify, but sort of give up their data lock-in, mandatory API keys or something, or just increased public sentiment around privacy. But that seems hard.
Yeah, if there's some regulation that forces an open API thing where you can kind of like how you think Urbit, you can port your data over to any app and you can still interact with anybody else on the Urbit network. If there's some law for some reason someday that somebody somehow passes this that forces Twitter and Facebook to do the same thing, where you can port your data over and still interact with everybody else on Twitter in some open way, then I think it's possible. And I think it would almost certainly happen in that case.
Totally. But is Urbit in the same category of Blockstack? Same.
Yeah. I mean, I think Urbit is if they make it way easier to use, I could see it getting some adoption in some circles. but I think it's, but not for the social media stuff. Just more like, people might build apps on it because it's interesting or something, but I don't think it's like, you're not going to use Urbit to replace your Twitter.
Yeah. And last question is Bitcoin still way ahead in the money, in the competition to be decentralized, money? And is that sort of a winner take all game, or how do you see that playing out?
I think it's certainly in the lead to take digital gold. I think it's going to win that for sure. I think, a digital alternative money, Bitcoin's not being used for payments that much. I think somebody could still unseat it in that category, whether it's DAI or, something else.
And Ethereum in its use case, is it, as confident, are you as confident in that winning that as you are Bitcoin winning digital gold, or what's your prediction there?
I'm like 75% as confident on Ethereum winning its category. I think it will, but there's some universe where I'm wrong.
And who's second, most likely?
So, well, we invested in both of them, but I guess it's good to have your money where your mouth is. So I think Polkadot and then Near are probably like, so both, like, Near needs to decentralize more before it's practical, and Polkadot needs to make it easy to write Solidity contracts on it, which they haven't completely done yet. I think both of those things happen. If both of those things happen, then their odds increase.
So lastly, what do you think is a misconception people have about the something specific or the broad ecosystem, crypto ecosystem right now, or what's something you think that differently than what other people think?
I guess one thing I would say is I think a lot of these dApps that use, and some other people think this, but people are not making decisions based on their actions based off of it. So I'd say the thing I think that's different is I think these centralized oracles are a really big problem. They effectively, every dApp is only as decentralized as its weakest link. And so if you have a centralized oracle that's pricing everything, it can effectively, in most cases, steal all the money. So you've built a centralized app that's harder to use than any other centralized app because you have some decentralized elements, but you have this really weak link, which can easily be broken, which is the oracle itself. And so there's not like a great answer for how to solve that problem. And so instead, what people have done is they just basically said, well, we'll just solve it someday in the future. But very few people are actually working on progressing solutions to that problem. And so it's like one day people are going to wake up and it's going to be a huge issue. And it's like a systemic risk. You can kind of like people prior to 2008, they felt that like all these collateralized debt obligations and all these like weird packages were a big risk, but it was kind of hard to put your finger on exactly why it was. It's the same thing here, I think.
That's a great place to wrap. My guest today has been Joey Krug, co-founder of Augur and partner at Pantera. Joey, for people who want to learn more and go play with Augur and go deeper, where can you point them?
Yeah, so if you want to learn more, you can go to augur.net. There's links to the UI there. There's links to the Discord where you can join like a community chat. If you have like questions or whatever, yeah, you can talk to anybody in there and they'll probably help you.
And you can follow Joey at Joey Krug on Twitter. Joey, thanks so much for coming back on the podcast.
Yeah, thanks for having me.
If you're an early stage entrepreneur, we'd love to hear from you. Check us out at villageglobal.vc.